If you're planning on buying a home soon, hopefully you haven't just done any of these. I'm Jeremy Tolley, and you're watching Keaton, PA. Once you've applied for a mortgage to buy a home, there are some key things to keep in mind, and while it's exciting to start thinking about moving in and decorating, be careful when it comes to making any big purchases. And here are a few things you may not realize you need to avoid after applying for your home loan. Don't deposit large sums of cash. Lenders need to source your money, and cash isn't easily traceable. Before you deposit any amount of cash into your account, discuss the proper way to document your transaction with your loan officer. Don't make any large purchases. It's not just home-related purchases that could disqualify you from your loan. Any large purchases can be red flags for lenders. People with new debt have higher debt to income ratios and how much debt you have compared to your monthly income. Since higher ratios make for riskier loans, borrowers may no longer qualify for their mortgage. Resist the temptation to make any large purchases, even for furniture and appliances. Don't co-sign any loans for anyone. When you co-sign for a loan, you're making yourself accountable for that loan success and repayment. And with that obligation comes a higher debt to income ratio as well. Even if you promise you won't be the one making payments, your lender will have to count the payments against you. Don't switch bank accounts. Lenders need to source and track your assets. That task is much easier when there's consistency among your accounts. Before you transfer any money, speak with your loan officer. Don't apply for new credit. It doesn't matter whether it's a new credit card or a new car. When you have your credit report run by organizations in multiple financial channels, it will have an impact on your FICO score. Lower credit scores can determine your mortgage interest rate and possibly even your eligibility for approval. Don't close any accounts. Many buyers believe having less available credit makes them less risky and more likely to be approved. This is not true. A major component of your score is your length and depth of credit history. Closing accounts has a negative impact on both of these aspects of your score. To sum it up, be upfront about any changes when talking with your lender. Blips in income, assets, or credit should be reviewed and executed in a way that ensures your home loan can still be approved. If your job or employment status has changed, share that with your lender as well. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. The bottom line is this: you want your home purchase to go as smoothly as possible. So remember, before you make any large purchases, move your money around, or make any major life changes, be sure to consult with your lender, someone who's qualified to explain how your financial decisions may impact your home loan.